Money, banking, and the Federal Reserve. Money is the lifeblood of our civilization. It touches every aspect of our daily lives, yet few truly understand where it comes from, how it works, and who controls it. This documentary script explores the origins of money, the mechanics of banking, the creation of the United States Federal Reserve, its role during crises, the criticisms it faces, and the uncertain future of money itself. The origins of money. In the earliest days of civilization, people relied on barter, trading grain for livestock, tools for clothing. But barter had limitations. It required a double coincidence of wants. The solution was money, a universally accepted medium of exchange. Gold and silver became the dominant forms of money for thousands of years. Their scarcity, durability, and intrinsic value made them trusted across cultures. Ancient China pioneered paper money, and Europe later adopted it as banks emerged. Banks originally served as safekeepers of precious metals, issuing notes that represented deposits of gold or silver. How banking works. Modern banking operates on a system called fractional reserve banking. When you deposit $100 into a bank, the bank is not required to keep the full amount locked away. Instead, it keeps a fraction, say 10%, in reserve and lends out the rest. That $90 loan can be deposited into another bank, which lends out $81 and so on. Through this multiplier effect, the banking system creates money far beyond the original deposit. This system fuels economic growth but creates instability. If too many depositors demand their money back at once, a bank run occurs, exposing the fragility of the system. Birth of the Federal Reserve. In the late 19th and early 20th centuries, the U.S. experienced repeated banking panics. The Panic of 1907 was particularly severe. Without a central bank, the financial system relied on private figures like J.P. Morgan to coordinate rescues. This exposed the need for a more structured response. In 1910, a secret meeting was held on Jekyll Island, Georgia, where bankers and politicians drafted the blueprint for a central bank. In 1913, the Federal Reserve Act was passed, creating the Federal Reserve System. Its purpose, to stabilize the banking system and act as a lender of last resort. The powers of the Federal Reserve. The Federal Reserve has immense powers over the U.S. economy. It regulates banks, acts as a lender of last resort, and most importantly, manages the money supply. It influences the economy through open market operations, buying or selling government securities to control liquidity, interest rates, adjusting the cost of borrowing to influence economic activity, reserve requirements, determining how much banks must keep in reserve. Through these tools, the Fed can stimulate growth or slow down inflation. But this power also comes with risks. The Fed in crises. Throughout history, the Fed has been tested in moments of crisis. The Great Depression. Critics argue the Fed's inaction deepened the collapse. 1971. President Nixon ended the dollar's convertibility to gold, ushering in the era of fiat money. 2008. Financial crisis. The Fed injected trillions to rescue banks and introduced quantitative easing. 2020 pandemic. The Fed created unprecedented liquidity to stabilize markets, pushing debt to record highs. Each crisis expanded the Fed's role, but also sparked debates about its consequences: inflation, inequality, and long-term instability. Criticisms of the Federal Reserve. The Federal Reserve is one of the most powerful yet controversial institutions in the world. Key criticisms include lack of transparency. Many call for a full audit of the Fed. Inflation. By printing money, the Fed reduces the purchasing power of savings. Boom-bust cycles. Artificially low interest rates may fuel bubbles that inevitably burst. Unelected power. Decisions affecting millions are made by unelected officials. Supporters argue the Fed is essential for stability. Critics claim it is the root of instability, the future of money. The financial world is changing rapidly. Digital currencies, central bank digital currencies, CBDCs, and cryptocurrencies like Bitcoin challenge the Fed's monopoly over money. Some see CBDCs as the next step in monetary control, offering efficiency but also raising concerns about surveillance and freedom. Others argue decentralized cryptocurrencies represent financial liberation. The question remains, will the Federal Reserve adapt, dominate, or fade in relevance as money evolves? Conclusion. Money shapes our lives, freedoms, and futures. Yet the system that governs it remains poorly understood by the public. The story of money, banking, and the Federal Reserve is not just history, it is our present reality. To understand money is to understand power. And until we do, we remain bound by invisible chains. If you found this video helpful, please give it a like. Share it with friends and family and subscribe for more deep dives into the hidden risks shaping our financial future. This is Felix! See you next time.